I would strongly suggest to all my citizens, I would say you guys should be holding Bitcoin because, this is a Bitcoin friendly country and we may have a Bitcoin strategic reserve and, ultimately someday we're going to return to a sound money standard and Satoshi's, the dollars. I mean, if what I'm describing occurs, there will come a day when the dollar just won't be relevant anymore. I mean, right now it's a good payment rail because everyone accepts it, everyone knows what it is. And that's why the stable coins, are necessary and they work. But behind all of that, the real money is the Bitcoin. I mean, Bitcoin could go up 10x. Bitcoin could go from 100,000 to 1 million. It would still only be 2% of total assets, and 2% is not a big percentage. So yeah, there's a lot of upside here. I mean, I think Bitcoin is going to go up 10x, and then I think it's going to go up 10x again. So what does that mean? That means $10,000 or $10 million a coin. I think that's going to happen.
Lepard predicts that by the early 2030s, the world will be forced to return to a sound money standard. He strongly advocates for Bitcoin, arguing that it offers a superior form of money compared to gold. While gold has been the traditional safe haven asset, Bitcoin's verifiability, portability, and fixed supply make it a more resilient monetary asset for the digital age. One of the most striking points in Lepard's analysis is his long-term Bitcoin price prediction. He argues that Bitcoin's adoption curve, combined with its fundamental sound money properties, could drive its value significantly higher. He envisions a scenario where Bitcoin appreciates 10x from current levels, reaching $1 million per coin, and then another 10x, ultimately hitting $10 million per Bitcoin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
In my view, important point to make, I think most Americans do not understand that we are in a sovereign debt crisis. I want to get up on a soapbox and scream that to the entire world. A lot of people are in denial about that, but we are. And how do I know? Look, and these are in the book. There are two charts. One shows, gold in terms of bonds, and the other shows Bitcoin in terms of bonds since 2020. Since 2020, gold in terms of bonds is up over 200%. Since 2020, Bitcoin in terms of bonds is up 2,000%. So what that says, bonds, U.S. Treasury bonds used to be the base layer of the financial system. They were the most secure thing. They were where large pools of money could go to safely protect that wealth. And what's happening? It's not working anymore. These two other monetary assets are just kicking bonds' butt in a big, big way. And I don't think that's going to change. I think it's more of it's as we all know, it's the gradually then suddenly. I think we might be getting to the suddenly phase. Now, I don't want to say for sure that there's going to be a COMEX or an LBMA default. I don't know. We've seen things like this before in the past, silver squeeze and some other things. And generally speaking, they're going to move heaven and earth to get this one back in the can. They know this is existential for them. They're going to try really hard. They'll call on every source of gold they possibly can to calm this down and make everything, no, don't worry, we got plenty of gold, it's all good. But, maybe they'll be successful at that, maybe they won't. And what you can see is we had inflations before 1971, but they were somewhat mean reverting and self-correcting. World War I was inflationary, World War II, the Civil War, 1812, they were all inflationary. But boy, after 71, the inflation rate just goes straight up like a hockey stick. And so going off the gold standard was really the kickoff event to the death of sound money in the world, and it's only gotten worse as we've gone along. Every big print gets bigger. 2020 was bigger than 2008 2008 was bigger than 03 was bigger than 98. They've just you can go back and see how they were continually getting worse, which is why I think mathematically we're now reaching the end game. I think this is going to get resolved. We're going to be back on a sound money standard sometime in the early 2030s, in my opinion, because this problem is going to accumulate over the next 6 years, and to the point where people are going to be screaming that we've got to go to sound money. I would strongly suggest to all my citizens, I would say you guys should be holding Bitcoin because, this is a Bitcoin friendly country and we may have a Bitcoin strategic reserve, and, ultimately someday we're going to return to a sound money standard and Satoshi's, the dollars. If what I'm describing occurs, there will come a day when the dollar just won't be relevant anymore. I mean, right now it's a good payment rail because everyone accepts it, everyone knows what it is, and that's why the stable coins, are necessary and they work. But behind all of that, the real money is the Bitcoin. So if we're at 2/10 in equities or in Bitcoin right now, I mean, Bitcoin could go up 10x. Bitcoin could go from 100,000 to 1,000,000. It would still only be 2% of total assets, and 2% is not a big percentage. So yeah, there's a lot of upside here. I mean, I think Bitcoin is going to go up 10x, and then I think it's going to go up 10x again. So what does that mean? That means $10,000 or $10 million a coin. I think that's going to happen. Now, I'm not saying exactly what time frame. I mean, you probably got to give me 15 years for that to happen, but it's going to happen in my view, and that's Saylor's target is higher than that. So it just seems pretty natural and obvious to me. It's arguable that we're starting to see a failure of the paper gold market, and we're starting to see people realizing that fractional reserve gold is not the same as real gold. Very much with Bitcoin, not your keys, not your Bitcoin. But to tie in the tariff piece of it, the related thing, Michael, is that when we seized the Russian assets back in the war, when the war started, that sent a message to every single country, hey, the U.S. doesn't like what you're doing, they can freeze your financial assets, throw you out of SWIFT, right? And so that kicked off another round of buying of central banks. And what we're seeing is kind of the world coming to grips with the fact that we need a neutral reserve currency that's not controlled by the U.S., and more countries are starting to understand that. And therefore they're saying, well, store my excess wealth in U.S. dollars. I think I'll pass. Give me the gold. Because I know it can't be debased, and I can see the U.S. fiscal train wreck that's bearing down on them, and I know they're going to have to print a lot of dollars. And I think I've dug deep on what's going on in London, and I've talked to a lot of people about it, and there are a lot of possible causes. I mean, it also might be, Besant's a gold guy, and he said things cryptically that would indicate that maybe the U.S. could be thinking about a gold price reset. He said there may be a Bretton Woods-like event coming, and if there is, I want to be at the table. He said that last June. With that kind of as a backdrop, I mean, I think they might have tipped their hand to some of their rich friends and big guys, and you might have hedge funds saying, if that's coming, we need to own gold, and therefore, suddenly more demand at the LBMA. I'm speculating now. I can't prove any of that, but it seems like it could be right.
Another intriguing possibility Lepard discusses is the potential for a gold price reset. He references cryptic statements from financial insiders suggesting that a Bretton Woods-like event may be on the horizon. If such a reset were to occur, it could drastically alter the valuation of gold. Lepard notes that if the U.S. were to revalue gold to align with its current monetary base, the price would need to be around $80,000 per ounce, far higher than today's levels. This kind of price reset would signal the official recognition of fiat currency devaluation and could mark a major shift towards a new monetary system.
Both going to go up a lot, okay? Yeah. But Bitcoin's going to go up more because it's got an adoption curve as well as a sound money component to it. I mean, the math is quite, is quite scary. This is in the book as well. I mean, there was a time in the 70s when you could take our monetary base, divide it by the 261 million ounces the U.S. owns, and you came up with a $35 reference price. It's like, okay, easy peasy, I get it, right? You do that math today to balance all the money we've created since that point in time with that 261 million ounces, because we haven't grown our gold reserve. The price of gold would need to be $80,000 an ounce. It's at 2,900. So, somebody's going to get hurt here, and there's going to be. I mean, as Luke says, gold's going to trade in a different zip code. If and when it gets reset. Now, let me also say though that I think it's important, and this is where Jason Lowry comes in. I think it's important, and Loomis gets it, and others get it. China and India and Russia to a degree, and the Middle East, although less so, have all made a big bet on gold. I mean, they see that the fractional reserve market's not working right, and that they understand the broken monetary system, and their solution is buy gold. Well, okay, fine. The better solution is buy Bitcoin. And so from a strategic point of view, and I'm of two minds on this because I never like seeing our federal government get richer or more powerful, but frankly, I prefer our federal government to the Chinese federal government. The U.S. could make a great strategic move by moving to a Bitcoin standard, just skipping the whole gold step. And I hope they will, and I hope they do. And that's what Jason's obviously working on doing. And he's got a role there that hasn't been disclosed yet, but I know he's working on it. And so the bottom line is that I think that we will go to a sound money standard. And ultimately, that sound money standard will have to be Bitcoin because gold's got so many flaws. I mean, it's hard to verify. Right. You don't know who really has it. I mean, look at the Fort Knox and West Point and Denver Mint and San Francisco Mint stores of it. They haven't even been audited since 1953. So we don't even know if we really have the gold we say we have. And I met with Ron Paul once, and he told me he doesn't think we do. So, so you got that problem. And by the way, the same thing with all the other countries. I mean, how do you verify it? I mean, the beautiful thing about Bitcoin is you got this triple entry accounting where, you can show your address and show what you got. And so, and you can settle faster. And I mean, think about the shipment issues, et cetera. And the false bar issue. I mean, you can take a tungsten bar and coat it with gold, and you can't detect that easily. So hopefully, the U.S. will be smart enough. I mean, insofar as you want the federal government to succeed, and I'm mixed in my minds on that, the U.S. will be smart enough to just skip the gold step and go to Bitcoin. I just totally ignore these short-term fluctuations. I mean, my view is Bitcoin's going to bounce between 90 and 106, and who cares? And then when we get done with that flag, we're going to go to 140 because flags fly at half mast, and we were caught in the 58,000 club for a long time, and then it broke out and went to 100. So project that again. The next step's 140, and that happens sometime later this year. Yeah, the inflation statistics are totally cooked, but they aren't going in the right direction. Even being cooked, they still show an increase, which kind of puts Powell in a box. I mean, I tweeted this morning that he's trapped like a rat, because they clearly haven't obtained their 2% objective, and they said they were on the glide path to doing that. But I also tweeted a series of month-to-month changes, and I mean, it's going the wrong way fast. And I mean, you can see this. My quarterly year-end letter shows, that like agricultural prices were up 28% last year. The longshoremen struck in October of last year, and they got a six-year deal, increasing their salary at 10% a year. So their salary is going to go up 60% in the next 10 years. This is a major labor contract, and a 10% labor bump doesn't really fit with a 2%, inflation narrative. So as I've been saying, and as my book says, we now live in an inflationary world. I mean, for a long time we didn't, but it turned in 2020. We had peak deflation March 2020. So now, how's that going to get resolved between Trump and Powell? There's going to be a clash of the titans here, and Trump can't fire Powell. The Congress could fire Powell. Trump wants lower rates. The world and the U.S. needs lower rates, if only to try and stop the debt doom loop. I mean, as you all know, the current U.S. federal interest expense is running at $1.4 trillion, and if you go to the Fed website and chart that, and this chart is in my book as well, it's kind of gone parabolic, and we've got to roll over between $7 and $10 trillion of debt this year, and it's at a much higher cost than it used to be, and so that makes the deficit bigger, which then means they got to sell more bonds, which wash, rinse, repeat. So they really need lower interest rates, and yet they've got an inflation problem, a recurring inflation problem, and how this is going to get resolved, I don't know. They also handed Trump a terrible hand with a very overvalued stock market. One could argue, and I think the Fed in general is made up of Democrats, not Republicans, one could argue that they want to see everything fall apart on Trump's watch, so Trump gets blamed with it. Stock market goes down, and then that's what will enable them to do the big print. I mean, I think right now they don't have the air cover to do a big print because people are going to scream about inflation if they do it. But we'll just have to see.
Despite official narratives, inflation remains a persistent issue. Lepard highlights that even manipulated government statistics show inflation moving in the wrong direction. This puts Federal Reserve Chairman Jerome Powell in a difficult position. He needs to lower interest rates to prevent a debt spiral, but doing so could further fuel inflation. With the U.S. running a record $1.4 trillion in annual interest expenses and needing to roll over $10 trillion in debt this year, the debt doom loop is accelerating. Please like and subscribe.